Welcome back to the Era Traders FX. This is Era Traders FX, and in this video, I'll be talking about DAX strategy. You're welcome. If you're joining us for the first time, stay tuned. God bless you. All right. So the first thing I'll be talking about is market structure. How you use market structure, how you should view market structure, and the right way to trade market structure. So one of the first things you need to know is that market structure is the way the market moves. We have three types of structure. One is the substructure. So we have the swing structure. We have the swing structure. Then we have the substructure, and we have the minor structure. So this video, this is everything you need to know about this strategy. One thing, this is everything you need to know about this DAX strategy. And I'll be guiding you step by step. Just stay tuned to the end of this video and you'll learn this strategy perfectly. All right, so those are the three types of structure. So the swing structure is like this, whereby you have a break of structure to the upside like this. This is your break of structure, right? That's your break of structure. So we have this high, and we have this low as our range. So this is a swing structure, and you're expecting price to come back down and continue the buy. That's come back to the discount level. Now, this is one way to look at the discount level using your fib 50% of this range, like this. That means price should come into this discount level, but this is the way DAX does it. Instead of this, it does this. So it wants price to come into this deep discount. So there's the normal discount and there's deep discount, which is this. So that level is where you want to buy from to continue to buy again. This push down to the downside coming at this. This push to the downside is your substructure, right? Is your substructure, and you can take your sales down, but this is your minor structure, which is just understand your major structure. That's your swing high, swing low, your range. That's your range. Price coming into your deep discount and buy. So that is all about structure. Then you continue to buy like this. That's all about the normal structure. This is the basic structure. Now, moving forward, you need to understand what advanced market structure is. So this is normal structure, sweep up, normal break of structure like this. But advanced market structure, a low or an high is not a strong low or an high if it does not first sweep a low before breaking structure. So this is what defines a low to be protected. This is what makes this low to be protected, right? So this now becomes your range. And you do the same thing again, 50% of from your low to the break of structure, you are now expecting price to come back down into your deep discount to buy. Do you understand? For the set scenario, this is what you have. You have a sweep of an eye. This, remind you, this is your sweep of the eye. So this is what we call your sweep. Then you have your break. Then you have your what? Your structure, your swing structure from that high to the low. And what do? Your fib from here to here. That means you're expecting price to come back into this level and drop. Now that's what we have for advanced market. So you need to understand this. The next, like I said, in 20 minutes we're done. So the next thing we want to look at now for is what is liquidity. what is liquidity? Liquidity is basically where market is, where money is in the market. It's basically money. So now, this is what we have: three types of liquidity, which we'll be talking about in this video. We have one, structural liquidity, we have inducement liquidity, and we have transactional liquidity. Now, when the market takes out the high like this high is, this is what we call transactional liquidity. Market has broken this high, that's transactional liquidity. Then now this becomes your range. Now you're expecting price to retrace, then to buy from your 50% of this as usual. So now this low here that gave you this second break of structure is what we call structural liquidity. Is structural liquidity. Mind you, your first low must be a protected low. So you had a sweep of this low, then it's now protected. This second break of structure to the upside, so something like this, that is not a strong low, is your structural liquidity. So you are expecting price to what? Come back and take it out and push. So this is what we call structural liquidity. This transactional liquidity, this structural liquidity. This is transactional liquidity, and this is now another transactional liquidity. Take note of that. Now let's go to inducement liquidity. Inducement is where you don't have a structural liquidity. So since there's no structural liquidity because you had your sweep of an eye, you had your sweep of an eye, right? And your break of structure. Since you don't have a structural liquidity, price will use that your eye as structural liquidity and drop. I believe some of you must have experienced this, hereby you see a sweep of an eye like this. You get, this is it. Then now, this is for the buy. Sweep of a low, break of structure, price will come back, take it out and push. Now I'll be doing some chart example. I'm just doing some graphical illustrations first so that we'll get to understand the concept. So this is your sweep. This is your transactional liquidity. Price took it out. Then what happened? Price will come back and this will be your target. So this is liquidity. This is liquidity. Now, POI. Now, after seeing your sweep of a low, of an high, second break of structure, stuff like this, where do you want to sell from? Now, take note, the first thing you need to know is that from your structural liquidity to your high, this whole zone is your POI. But now you now need to understand that there's not a specific POI, there's a specific zone you want to sell from, which is what we call your Cosmodo order block. That's the order block that failed here, where you had your sweep, that order block that failed. I will show you chart example, so don't worry. That is where you want to sell from specifically. So you're expecting something like this, and you want to sell to the downside. This is the way DAX trade, basically. That's it. You understand? Then for the buy scenario, we have a sweep of a low, break of structure, second break of structure, then price coming back to your Cosmodo buy. Now, there are things you need to take note of while trading this, that your structural liquidity must be in your 50%. So like this case now, you need to understand that your structural liquidity must be in your 50%. Something like this, if you have something like this. And now, this will now make sense. Your zone, you're expecting price to take it out. So that's a criteria that it must be below, this structural liquidity must be below your 50%. Must be below your 50%. That's one key thing that most people miss their setup for. Then you take your buys from here and you target here. So let's look at some chart examples and quickly do some chart example when we're out of your phase. I hope you get this strategy. I hope you understand. So now let's go to the daily time frame, because you must understand structure. Now, this is what we call your swing structure. Now I'll do that. I'll do this. From that high to the low is your swing structure. Now, this is your break of structure, clearly. Remember that this is the daily time frame. That's your break of structure. And what are you expecting? Remember, you need structural liquidity. So this is your liquidity price to take out your liquidity. And this becomes, this you can even use this as your sweep of an eye. Those of you on my channel, you know, I know now I've done this and I did this analysis when price was there, and you can take this whole zone to other block. But because it will enter into your this, you can take the wicks. Just take the wick of the candles and you're good to go. Can you see that? And what are you expecting? Drop to the downside. So what did we see? We basically saw a sweep of this eye. Price came down, swept that eye, gave us an internal structure. Now, there are two types of pattern basically we look out for. There's the type 1, which is what I shared the first time, something like this, and price coming back. There's the type 2. There's the type 2, which is this. Price will come back, take it, and drop. So you can maybe see your order block from your fade order block. What's another block? Last for a sell, last buy candle. For a buy, last sell candle here. For a sell, last buy candle. So let me show you guys chart examples. So now I want to go down to, you already know where you are going to. You already know from this, you already know where you're going to. Now let me go to the 1 hour time frame and see if I'll see another pattern in the 1 hour time frame. Now in the 1 hour time frame, what happened here? Now price gave us a clean break like this to the downside. Give us a clean break. Now we could clearly see that this is a clean sweep. So making this eye protected. And this is your structural liquidity. So if you are taking this whole zone like this as your order block, that would have worked. And this price took out that level. And where will you be targeting your next level? So it's that simple. It's that simple. Price takes out structural liquidity. You go next to the next level, just like that. Even this one that I shared, um, I shared it recently. So this is my structural liquidity. We had our sweep of the eye. We had the sweep of the eye. We had the break of structure. Then now, where is the Cosmodo order block? This last buy candle there in that region. That's it. Where are we targeting? Next level here. So it's as simple as that, guys. If you have any questions, you can ask questions. But please like this video, share, subscribe. See you on the next one.